In the next 60 seconds, I'll tell you if this property makes sense for an investment or not. I am a builder and an investor for over 10 years, and I have a master's degree in real estate investments from one of the top programs in the country. So let's get down to it. I've gotten a lot of investors that have reached out to me. They're interested in doing development or redevelopment programs in this area, so I thought it would make a good idea for us to start here. So whenever you start looking for a deal, the first thing that you want to do is make sure that you have the correct filters. Today, we're going to be analyzing a duplex. So I did put on the keyword here duplex so that we would only get those matching results. And I did price it from low to high just because as when I was starting, I really had a budget. So it was important for me to be within that budget for whatever it was that I was looking at. Now, what you have to be careful when it comes to duplexes on Zillow is that a lot of times they're only selling you one side of the duplex. So there are certain duplexes, depending on the type of construction that it was, that later on you can actually split them to be sold kind of like townhomes or villas. So even though they put duplex on the description, they're only selling one side of it, not the whole thing. I think this is one of those situations, and you can usually just tell if it only has like a 2.2 here in the square footage, but a lot of the times they also give you an aerial view and they like circle out that it's only one side of it. Here's another one. All right, so this one actually does look like it's the whole duplex for sale rather than only one side. So you can tell because it's a 4.2, so that means that probably each unit is a 2.1. This is a true duplex. This is $400,000 for both units, not just the one unit. This is the floor plan for each of the units. If it's 1,300 square feet total, that means that each unit is a little bit over 600 square feet. And do the analysis. Now, the first thing that I like to look at is to see the pictures to understand what's the state of that property in itself. So here, this aerial view is great because it does show you what the properties around it look like and the street that it's on. So just from here, I can tell that this is not a main street, but it's also not like a closed neighborhood. So that will influence your price. Specifically for rental purposes, people don't really like to live in main streets or where there's a lot of traffic. This is what the duplex looks like outside. So you have that older, lower height roof. You don't have a central AC. You have a bunch of window units. And so all of these things are stuff that you want to start looking at. Now for the interior of the units, I can see here that this is some sort of like epoxy floor. And then this is all block. Now you do have a nice window here in the kitchen, but your kitchen looks like it is kind of segregated from the rest of the house. So there's no such thing as an open space or anything. You can see all of the bedrooms have window units. Here, I mostly like to see if you can see some sort of condensation or damage on the walls because that's actually going to tell you there's mold. The bathrooms have been partially remodeled. You can see the size of the bedroom. So they're very, very small bedrooms. And then you can see here how it connects into the kitchen. Obviously here it looks large, but this is a really small hallway. Okay, this is another aerial view. So again, this is your main street here and this one too. You are pretty close to the beach, so that's definitely going to be a plus, especially since this is zoned duplex. For redevelopment reasons, you would definitely want to check what is the maximum density on the redevelop it into a 2-story building, or you could add more units to it. Another thing is who owns that and who owns that. Here you just have land. This looks high and dry. So if you're a bigger developer, you could definitely look into just acquiring all of these and then proposing a larger redevelopment in the future. Now go to the description. I love reading the descriptions. You can tell whether the real estate agent that's listing it is experienced or not just from the description. So here, potential, that means do your own due diligence. Bright open floor plans, eating kitchen, appliances, and then the AC looks like it was recently replaced. Your roof is over 10 years old, something you're either going to have to replace or you're going to just have to account that it's going to really impact your home insurance. It's really important that you scroll down and you look at the actual facts and features. So here you can confirm what's your total square footage area. You can see whether it has central AC. It says central air, but we saw a bunch of window units, so I don't think that's correct. You can see the parking. You can see the lot square footage so that you can then check zoning and density requirements to see if it is something you can redevelop. You have the parcel ID, which makes it easier for you to check it on the property appraiser's page. It does have separate electric meters. This is a huge plus, and it's also on public sewer and public water, so you don't have to worry about a septic tank or a well. These are your annual taxes. Really important that you use whatever county's calculator is to predict what your taxes are going to be after your purchase. Here, you obviously have your listing terms, cash or conventional. So FHA is off the table. For rents, they didn't really publish the rents, but if you go back here, you can see what they were renting for before. I highly doubt that these are the current rents, but that's something that you would have to reach back out to the agent to confirm. And last but not least, if you're able to find who the listing agent is so that you can contact them directly. If you're working with an agent, then by all means, this is something that you delegate. You don't really even worry about it. But if you're not, and you just want to get this information yourself, here you can see it says listed by, and it has the information from the agent. It has their phone number and also their broker information. Hold on. I will say that most listing agents appreciate when you contact them directly because they're going to get double commission. Listing agents, though, will not work with you if you don't have experience or if you're not pre-qualified because they just really want to represent and focus on the seller. So it's a hit or miss. Most of the time, because I had a script and I was well prepared when I would reach out to them, they would work with me and give me all of the information that I needed. All right, so now that we just got our basic listing information, we're going to start plugging all of the data in. We're going to be doing some market research utilizing AI. I prefer to use Gemini when it comes to real estate analysis. However, I create my prompts on ChatGPT. This data that I'm going to show you here is not 100% accurate. And even though I'm doing this for purposes of showing you how a quick deal analysis works, it's very important that if you were to be serious about this, you would want to get reliable data and do the research yourself, either working with an agent or utilizing other real estate companies that do compile and can offer this data like Redfin or Crexi or CoStar, which is honestly the best one to do it. This is my deal analysis calculator. I am going to be posting a link to download this directly on my website. For the property name, I usually just put in the address. Okay, number of units is going to be 2. It's 2 apartments. Purchase price, we're going to start always at whatever it's being listed for. So this is $400,000. Now, rentable square footage, you want to go back to the listing. And so this one was $13.92. Perfect. So then it shows you your price per square footage. So you're at $287. This is a data point you're going to compare once you do your comp analysis. This true comp is a property that looks just like the one you're buying. So if you're comparing this $287 to a property that has been remodeled, that has central AC, the most beautiful finishes, that is not a true comp. I'm going to start with the bottom sections here. The first one we'll focus on is income. Now, I just want to explain that on this calculator, which again, we're going to make available for a limited amount of downloads on our website, you have 2 columns. You have the yours and the sellers. Technically, when you are using this for a full deal analysis under the sellers column, you're going to want to put in all of the sellers' current numbers, including their taxes, their insurance, etc., and expenses. And then in the yours, you'll change only those numbers but leave the same income. Let me move myself over here. And we'll start plugging in our gross scheduled rents. So your gross scheduled rents for this calculator, you're going to do the yearly scheduled rents. So let's just assume that each unit is rented for $1,800. Now, we're going to check these numbers later. I'm also going to run a rent market analysis to see what 2 1 units in that area in the same state nearby are renting for. What is that market rent? So it's $3,600 per month. And then to make it into a year, you would just put parentheses on this and then multiply it by 12. So this property makes a total of $43,200 per year. Now, vacancy in Delray within this area, I would say that it's pretty low percentage of what your current rents are. So usually I would do probably like a 5% in this area. So because this unit is on separate meters, we don't have to worry about utility reimbursements. Other income, this is when we think about pet deposit, pet rent, trash, all these other things. Now, taxes. We're going to plug in the seller's numbers. Again, these are not going to be your numbers when you purchase, but just for purposes of vetting this deal quickly, we're going to plug in the taxes and get what the annual tax amount currently is for this unit. For a duplex like this, I would probably say that your insurance is somewhere in the $4,300. Now we're just going to continue entering the rest of the expenses here. Now for repairs and maintenance, you want to plug in a number that makes this green here, which means that you're in a good what your expenses should be. Let's say for this one, because I just think that you're not going to have a lot of rental turn. $1,000 or $500 per unit is going to cover it. Obviously, this is not looking into CapEx expenses. We'll have a different line item for that. Now, general admin, this is something that you just want to manage yourself. There's just not enough cash flow in it. Management fee, this is if you were to hire a property manager. Most property managers charge anywhere between 12 to 15%. So you would just plug that in here and it would calculate it for you. I'm going to run numbers as if you were managing this yourself, which is what I do with most of my properties. Now for marketing, it's not something you're going to market. Utility, again, utilities are meters, so you don't have it there. Contract services and payroll, nothing. The only thing I will add here to contract services is we use apartments.com to manage all of our properties. And every single time we post a new for rent ad, I believe they charge us like $175. Here, at the bottom, it's going to go ahead and break down all of your expenses, and it's going to just give you a hit of what your numbers look like at this moment. Now, you'll want to make sure you edit here your capital expenditures. There is a note here for you guys that you should be at $250 per unit. However, just because I know that the roof on this property is more than 10 years old, I'm going to increase that to $350. You want to go ahead and put in your mortgage info. So for something like this, if it's an investment property, we're just going to do 25%. That means your mortgage around is $300,000. Interest rate, we're not in the twos anymore, so we're gonna have to change this to, I believe for something like this, you'll probably get a 6.7. 30-year mortgage, it does qualify for a 30-year mortgage because it's still residential multifamily. So here it shows you what your annual debt service is, okay? Now for closing costs, you always wanna use anywhere between 1 to 2%. Your loan acquisition points, it just depends whether you're going to go private or, just a conventional lender, but I would put probably like 2% in an acquisition fee here. So you would just leave that 0.
And other closing costs, you really wouldn't put anything there. I'm going to increase the closing costs just because the area is probably more like a 2%. Plugs in all of the mortgage and closing cost information. Again, just ignore everything that's here. I'm actually going to just delete this so you don't get confused. To look at your investment breakdown. So here it shows you that your net operating income, this is income after expenses, is $29,013. Now you're going to put away every year $700 for any big item expenses. That's your plumbing, electrical, structural, your roofing, your AC. The next one is it's going to show you cash flow after capital and primary debt service. Your debt service is $23,230. So that means that your cash flow before taxes is $5,083. This is the difference between 28 and 23. So it's going to shoot out what your cash on cash return is. Now, what is your cash on cash return? This is divide 5,083 by 114. You're going to get a 4.5% cash on cash return. It's also going to shoot what your debt service coverage ratio is. In this case, it's a 1.2. And then it's also going to show you your cap rate. Now, cap rates you usually use for larger multifamily deals, but some people do apply it for these smaller multifamily. Right now, this is showing as a 4.5% cash on cash return. This is something I would definitely pass on to. However, this is where your creativity as an investor comes in. And this is where you want to start looking, what can you do, or how can you force appreciation? How can you bring more income into the property? Or are you going to execute a redevelopment strategy so that this investment starts making more sense? When it comes into market research, I like to use AI to help me quickly analyze a deal. Love to use ChatGPT for prompt creation. And I prefer to use Gemini, and I do have the Gemini Pro for deal analysis. I just feel like it gives me more accurate data. So I don't really know from where it got that these are the current rents. Maybe it's from another data source. So about the neighborhood that it's going through rapid gentrification due to its distance to Atlantic Avenue. It's giving us a executive summary. So it believes that the rent ranges are between 2,000 to 2,300 per door. And short-term conditions could be if this could be our lease amounts if we don't do anything to the units and we just rent it as is, which is pretty close to what we assumed initially. Here it's giving you some rental comps. Would request at this point for it to tell me how far away these properties are from the subject property to make sure that they are again real comps and within the vicinity. So here it's pretty much telling us that the average market for a 2-1 is 1900. However, if it's renovated, this is what we could expect. Saying that our vacancy rate of 5% that we assumed was a little bit on the low end, that this is how many days it is on market before it gets rented. Information here is pretty valuable for us. Gentrification is happening, and when you have higher rental, you have units being rented at higher value, then that's going to obviously push yours, even if your property doesn't look as nice as the other ones in the area.
So now that we finished looking at all of this AI data, we are going to go back and just verify a couple of the items and start plugging things into the calculator with the assumptions. What we'll do to verify those rents is that we'll go back to Zillow. Zillow has a lot of really good data. It is not complete data. It is not the best place to get data, but if you don't have access to a real estate agent writing of a deal, then definitely utilize this. So the first out your filters, you're going to go ahead and put for rent here. Make sure that you put exact match for the number of bedrooms and bedrooms, and apply those filters. You'll be able to see what's for rent in the area. The duplex that we were looking at is somewhere here. So that means that these are not really comps. This is probably too far. So we're going to check this one first. This unit is very close to the duplex that we are analyzing. Nicer flooring, which just makes it look nicer. It does have wall AC units, so it doesn't have central AC. The kitchen is pretty small, and I believe this unit is smaller than the duplex that we are analyzing. They have this for rent for $2,300, and this is a 2-1 with 600 square feet. So the first thing I like to see is how many days has it been on the market for almost 70 days. And that tells me that the rent is too high, or there's just not a lot of demand in the area. Just because I know the area, I think that this rent is just way too high for what the unit is offering. What would I do in this situation? I would call Robert. Remember that Zillow is required to show who the listing agent and broker is. So you could give this person a call. This might be their cell phone or not. If not, you copy and paste their name into Google. You'll get their cell phone number pretty quickly. And I would just ask him and be honest. Hey, I'm not interested in renting, but I'm buying a duplex nearby. Can you give me some info? I would say the majority of real estate agents will provide you some information. They'll have a good conversation with you. I mean, technically you could be a lead for them. So if you're an agent not doing that and you're being rude, which I have had agents do that to me, you're leaving money on the table. This is another one that I saw. This one is for 1,800. This is a 2-2 with very close to the square footage for the duplex that we are analyzing. The unit is well kept, but it just has your, again, mid-grade level finishes, nothing fancy. It looks like it does have wall AC units. They just didn't include them on the pictures, which is smart. And it has a really nice backyard. It does have separate meters as well. So for this one specifically, given that it's $1,800 and it has one more bathroom, I would say that this is closer to a comp. Obviously, if you renovate the duplex that we're analyzing and you improve the finishes, then most likely you're going to be able to get something close to this or a little bit above it. Here again, I would call Federico and I would ask Federico, hey, what's up with this listing? He's only had it on for 3 days. So I would also save it in my favorites to see the activity on it. And last but not least, we have this other one here, which is 2095. This is a 2-2 and 1,000 square feet. Why is this one important? This is important because if there's a unit that is better than the one that you're looking to analyze, to work through all of these different assumptions, this one kind of tells you what the ceiling is. If they are willing to rent this unit, which looks okay, and it's a lot bigger than the one that you are buying for $2,000, then you need to understand that you're not going to be able to rent your unit for above $2,000 because there's inventory in the market that is going to exceed that. Only when there is a lack of inventory is when you're able to get away with these super high prices. Now, this one has been on the market for 165 days. It was last checked here and updated in February. So this tells me two things. Either, again, it's too high, something is going on, or here, I guess the landlord criteria, credit score 680 in this area. That's going to be a little bit difficult. So he's just probably having a hard time renting it to a qualified renter in his perspective, plugging all these numbers. So we are assuming that if we fix it up, we're going to be able to rent it for $2,000. And then we're going to do our yearly income. From there, you're gonna your vacancy is going to increase, obviously, because your income increases. For your taxes, this is very important. You want to know what your taxes are going to be. So the easiest thing for you to do is on Google, go ahead and type in the name of your county property tax calculator. If you type in Google the name of your county property tax calculator, most county appraiser websites have this, and what it does is that you'll be able to type in the address, it'll pull up the property specifically, and it'll calculate what the taxes are going to be at this new purchase price, which is going to affect the value, and they use that value to base your yearly taxes on. So here they're saying that based on this purchase price, which is going to be public records, the taxes are going to be about this much. So it's $1,000 more than what they were previously, and that is going to be $100 per month in cash flow capital. So you definitely want to take that into account. I did increase the insurance a little bit just because Florida insurance is crazy. I kept repairs at $1,000, assuming that obviously you do your renovations in the beginning. And then here's the rest of our numbers. So we went from a 4.5% cash on cash to a 7.9, which again, not great. But there's so many things we didn't look into this property. We didn't look to see any redevelopment opportunities. We didn't look to see what our IRR could be. So this is going to be generating about $9,000 in yearly income, which is in the 700 range on a monthly basis. And it's not taking into account your repairs. And that's very important because that's going to affect your cash on cash return. Other than that, the last thing that I would analyze are your sales comps. So for that, you go back to Zillow, you go on the sold, you make sure that all of this data is the same. And if you want very accurate comps, you're going to go here to more. You're going to scroll all the way down. And here where it says sold in the last, you're going to put 90 days. Now, I just did this and I saw that there hasn't been any transactions in the last 90 days, which makes sense. Real estate market in these areas is pretty much in a standstill. So we'll just have to use with the comps that have sold recently. Now, again, the duplex is here. So you want to look at only these two, not these. These are not comps. And I can just tell because the price difference is huge. So this is probably just a nicer area. This one is one of the duplexes that sold. This looks like the one we analyzed for the rent. And then the other one here, it's a duplex for $550. This was in 2024 when it sold. However, you could just tell that this is a way nicer duplex. It's in better shape. It's not bigger, surprisingly. It's actually 100 square feet less than the other one, but it's not as well kept as this is. The one we're analyzing is not as well kept as this one. Again, there's a lot of things here that I didn't look into. So this is just for you to quickly do a back of the napkin analysis and underwriting on the deal. If you were to like these initial numbers, then that would prompt you to now do a deeper search, talk to property managers, talk to real estate agents, go and drive the area, go and visit it in person, start requesting rent rolls, start requesting who's currently renting. Maybe you want to look into a Section 8 program. So contacting Section 8, how much are they paying for 2 bedrooms in that specific zip code? Is a property already in Section 8? Looking at your zoning, can you redevelop this? What other opportunities do you have on it? All of that is what you would look at once you feel good about these initial numbers.